What we have here is the US dollar index dated October 30th, 2011, and currently it is working at 76.18, where the closing of the Asian market has just been concluded, and we're towards the opening of the European heading to the North American sessions. And currently it opened with a gap on a daily basis, where last week's bar had a low here at the 74.66 level, and the major support here we're looking at is at 73.65. That is the major support. As we have made mention that this had been a complex head and shoulders formation, where the neckline was penetrated, and any particular penetration would increase volatility and momentum heading for the dollar to move lower. And that is the major sentiment of the US dollar, while the opening here was due to the unilateral intervention made by the Bank of Japan. So the opening gap between the closing price here, let's say we can get it from here, where the closing price was at 75.08 and opened here at 76.15, currently working at 76.12. The daily pullbacks for the dollar to move lower, simply because of that particular technical gap opening, would be able to be made on a daily basis. However, the strength of the dollar to accelerate would also depend on how the market would react on the stock market, especially on the Dow Jones. Looking at it here, that the dollar's strength has been rejuvenated by the weakness of the yen. And what we have here is the weekly formation of the US dollar index, where the low established here at 74.72, and a convincing bearish formation which would have led to the 73.57 to 85 level, where a major psychological support is established. And looking at the opening from the previous closing of 75.12, opening at 76.15, which is right smack on the opening of the previous week. In spite of that move, the stochastic's relative strength index combination is still negative for the US dollar to move lower, but this would now be entailed on a daily basis, where pullbacks would be expected. And on this chart, what we have is the cable yen on a weekly basis, together with the cable and the US dollar yen on a weekly basis as well, just to see the comparison between the cross rates and the two major pairs in its individual market price behavior. Now, with that said, prior to our position taking the long at below the 1.21 level, it was clear that the support price level here, let's see if we can get it, at 116.95, is actually a double bottom price relatively to its low on August, rather September, uh, where 116.82 was the support price level, but you would only be able to view it more clearly when you look at the monthly chart on the sterling yen, where the risk of taking a long position compared to a drawback down to 116 level would really be very minimal. And besides, there were 1, 2, 3, 4, and 5 months which was relatively down on a downtrend, and together with the yen, which is quite obvious, as well as the cable. However, this month's bar for October, which is the closing of October 31st trading day, would be an engulfing bar from the previous month's bar of the cable. Now, with that said, what we would be looking at is to be able to see how the momentum builds up towards the North American sessions and see how far this market would move relatively with enough volumes and with enough momentum, although any pullbacks would also be considered for the daily basis. Hopefully this video presentation on the US dollar index as well as the sterling yen would have been helpful to you for whatever is needed to be done in the foreign exchange market. However, risk what you can and simply take the precautionary measure to be able to hedge your positions. Thank you very much and have a good day.